Woohoo, the Excel, your Excel chart lab this evening. As the title suggests, we're going to be looking, use Excel, obviously, to analyze the Vanguard Life Strategy Growth Fund. Stock symbol, what's the stock symbol? VASCGX. Okay. Of course, before we get started, it's time for the disclaimer. Here we go. This Excel tutorial video is for educational purposes only. It is not for financial investment or trading advice, and there you go. Do not use anything you see or this evening to make financial or trading decisions, all right? So let's open up Excel. Well, I'll let you know that a little earlier, I was having trouble accessing, getting the stock history function to work because apparently there is a trouble with the server or something like that. But let's see what happens here. Open. Here we go. Let's see. Yeah, so that's not working for some odd reason. So we'll come over here. Let's go over here to investing.com. Let's try. Here we go. I got selected. There we go. And we're going to take 12 months worth of data, all right? Historical data, right? Now, I will tell you that I just got my first dividend and capital gains check from this stock, and it was pretty doggone nice, I must say, you know. So come over here now. We're going to say 4. Or we could just say, let's do how's that? Okay, apply. Download data. Minimize this now. And what's the first thing we always want to do? We always want to open data up and just take a look at it in an editor, okay? For that, for right now. It never hurts to open up your data and just look at it, okay? And if you can in the text, we can see if there's any problems here, okay? We got that there. I'm not sure if that's going to be a problem or not. The rest of it looks pretty standard. Let's just change this to close. Alright, high, low. Interesting. I don't see volume. Okay, let's do something else. Let's open up R. Let's just check something here. Oh, there we go. No, that's not right, is it? So what we're going to do is come over here. This will be perfect. All right. over here now and do and we could say history, comma, is that what it is? VA Alright, so this should give us our plot. Over here, data, I've never seen it before, by the way. I've never seen that. CSV. Of course, these won't have, okay, so we can't do a VWAP, can we? That's all right. Interesting. I've never noticed this before. Let's do a transform. And we'll get rid of this. These are all good. We could come over here and do something crazy like change these to like just like 2 decimal places. Right? So we don't have volume, which means we can't do a VWAP, can we? Let's don't confuse ourselves with, let's drop volume, since there's nothing there. And let's get rid of these also, okay? Because I may have added those in myself. Remove. We just want to keep our remove. You know what? Let's get rid of adjusted. Let's keep it simple, okay? Go over here now. Load. Good. 250 rows later. Good. And as always, be sure to stop by the chat session and say hi, all right? So let's come up here. So this goes from 120 to 1231. Okay, this is fine. Oldest to newest, all right? So let's start with something simple. A very basic calculation. We're going to do, let's scan out a little bit. Now, by all means, stop by the chat session and say hi, okay? What was I doing here? Close. But the good news is, we can, I believe we could certainly do Bollinger Bands. We could certainly do, we should be able to do we should be able to do Bollinger Bands. We can do things like high-low. We can do like, like high-low. We can do we can do a channel, you know. 50 high-low or 20 high-low, or so you can see a channel. No idea what happened there. What was that? Let's do a 50-day. So let's start over here. Now we're going to use a take. Yes, I know, you probably get, take is my favorite Excel function. It really makes it a lot easier to select, like, okay. What's the magic thing? The dash means. The only problem is, what's wrong? We didn't include the headers. It's interesting. It's actually using the sheet name to identify the data. Interesting. Huh. Let's start with a most recent 100 days. And of course, this is your standard. This is your standard. See what happened there? For whatever reason, it doesn't recognize these as dates. When you copy them over, it doesn't recognize them as dates. What cells? Date. There we go. Insert plot. This is kind of strange, isn't it? Okay. Okay, this is kind of odd. Let's try plotting just to close. Okay, so that works. Okay, this works now. Okay, good. So now we got your basic plot. Let's change this up to 47. Okay. So, what we're looking at here, what we're ultimately looking for here is what? We're looking for a crossover event. So we can see in the last 100 days we haven't really had any crossover events. But we have seen once in November and once in, here most recently in December, it went below the 50-day moving average and probably even below the 100. Let's add one more. Let's add one more value here. Let's do 100 day. A 100 day is a more common one to use. Oh, you don't have a lot of data, right? And of course, again, don't be bashful. Stop by the chat session if you're looking for something. Some people even go as far as 200-day moving average. Oh, you see what happened here? It automatically included, oh man. It automatically included, automatically included the new column. So let's take a look at something more simpler here. Let's go 50, 100. Okay. Once again, let's go 45. And let's go 53. Or 50. Okay? So this is a little better picture here. Okay? You can say, well, if it's above the 100 moving average, then it's, oh, look at this, we're below the 100 moving average over here. My goodness. You can also see that we haven't got any cross. Ultimately, what we're looking for, right, is crossover events, right? All right. So let's get rid of this. Let's get rid of this. Now let's move on to what? Let's move on to the Bollinger Bands, okay? Because the Bollinger Bands, we got the 21-day moving average. We got the 20-day moving average. Okay. And we need two more things. We need a 20-day rolling standard deviation, and then we need to calculate the upper and lower bands. And the upper band would be the average plus 2 standard deviations, and the other one would be proportional to the standard deviation. Alright, so we can do a 21-day standard, and which one do we use? We use the S. As a reminder, P means the entire population, all the data it's ever has been created or will be created for this subject. S means sample. Why sample? Because we don't have all the stock data, do we? Come back over here then. Okay, we come over here, we say 20 moving average plus 2 times the standard deviation. Okay, so we don't want this. Not quite sure why that didn't work. Well, you know what it is? Because we had the date up here, didn't we? Oh. Okay. There we go. Because you formatted the column. When you do a format, you're actually formatting the column itself. You're not actually formatting the data, interesting enough. Okay, so anyway, once again, average. I don't want it to do that. Don't quite know why it's, for whatever reason, oh, you know what it's probably because we got the column headings up here. So we're going to say F21 plus I don't want that stuff there. Okay. Then we say F21 minus I21 times 2. So now what we should be able to do here is come back over here again. Alright, and once again come over here like this and say the reason I keep hitting plus or enter is because on Google Sheets, okay, or maybe LibreOffice Calc has the same take function, but in order to complete a function in LibreOffice Calc, you hit the enter button. In Excel, you hit the tab. Okay. Let's come over here now. Okay. Let's come back over here. Start with 100. Okay. once again, over here we're actually, the format, you can think of the format as being sort of like an overlay. We're not actually, so it's not like we're actually changing the data. We're just formatting, whatever is in this column is going to be formatted as a date, okay? So we go high, close, average, and lower. Okay? And you can see oh, this is interesting, isn't it? My goodness. The green line's plus 2 standard deviations. Remember that? And this is minus 2 standard deviations. Orange line is the 20 moving average, and then the blue line is the. We come over like yeah, we can doctor this up a little bit, okay? Come over here and say, well, let's just make it dots, okay? Or maybe let's make it squares. Or maybe let's make it a little bit of both. What do you think? I actually kind of like the first one. Okay? So now we got our 2 lines marked here. And the general theory is supposedly, according to Mr. Bollinger, 90% of the closing prices will fit between the plus 2 standard deviation and the minus 2 standard deviations. Of course, we have costs. Look, 1, 2, 3 times since October, we've come down and touched the minus 2 standard deviations. And up here, 1, 2, 3 or 4 times up here. So it's kind of, and the general pattern's this. This isn't brain surgery we're talking about here, right? Typically when it touches the top band, it comes back down. It touches the bottom band, it goes below the bottom band, it goes back up. And the width of the 2 bands give us an idea of the volatility. You can see up here, you can see that it went from all the way up here down and back up and back down. Well, back over here, from here up to here, it stayed above the 20 moving average line. Then it dipped down a couple times. So that's kind of interesting. Let's just try something here. Let's look at the last 30 days. Okay, good. And I'll be sure to include a link to this video in the description and the comment to this worksheet, to this Excel workbook. The workbook is titled Life Strategy Growth Fund Stock Charts, XLS. Okay, so you can look for that in the GitHub repository. So we got this, and again you can see the touchdown. This is interesting. This is unusual to see it travel along this bottom, either the top or bottom along for this time. It's because this went back all the way back over here to okay, for like last week. Then it came back over to here. It's kind of just treaded along this lower line here. Interesting, and it kind of narrowed out here, moving a little more sideways. But so that's interesting, isn't it? Okay, so let's pull up our instructions. Oh, I forgot to mention, so I got this data from investing.com. Another one is St. Stokes, But it didn't appear to have it didn't appear to have mutual fund data. So anyway, let's come back over here now. Well, I'll tell you what. Let's do another moving average one, okay? Let's just put this over here. Let me show you what a trough, what's sometimes called a trough. So we got that over there then, right? Where do we want to put this at? Let's move this over. Insert. Okay. So what can we do? We can do a 50-day high and a 50-day low. Okay. Okay, we're going to try to create an EMA instead. Okay, just for the fun of it. Now, okay. I mean, you could do anything. You could come over here and you could do a 50-day high. So we're going to come down here to our 50, right? Actually, we'll do something a little fun. Come over here, all right? And we're going to say high, 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 high. And and I believe what this is, by setting it by setting the seed value and then start our calculations from here. This may sort of give us something like an EMA. I'm not quite sure actually, but we'll see. Okay, I can remember how to do that. So we're going to do a simple 50-day average, okay? Now watch this trick here, because the next column over is the low. If we drag it across, it should give us the low value, right? A, B, C, D, right? A, B, C, yes. Date, close, high, low. All right, here. Okay, the 50-day high and 50-day low didn't work right, did it? Let's get rid of this. Oh, you know what the trouble is? Oh, of course. This is a mutual fund. It doesn't have high, low, or volume, okay? If you look, all the prices are the same. That's because it's a mutual fund. Alright, so anyway. So there you have it. 20, 50, 100 moving averages and Bollinger Bands, okay?